norm. Moving on, the Finance Ministry's monthly economic report says that the economy is expected to grow at around 6.5% in FY25. That's a bit of a departure from the earlier range of 6.5 to 7%. It also says that the RBI's monetary policy stance may have contributed to a demand slowdown in the first half of this year. CNBC-TV18 Sapna Das is joining us more. Sapna, give us a sense of the importance of this monthly economic report and some of the key findings.
Well, absolutely. The November monthly economic report by the Finance Ministry is crucial. It has touched upon many important aspects which are extremely topical and also gives us a good bird's eye view of what to expect in FY26. Having said that, very quickly for the current financial year, well, the Q3 numbers are going to be better than what we have seen in H1. There is optimism on that front. That's what the report notes very clearly. But it also says that, it has also repenciled the FY25 growth at around 6.5%. I suppose that this is the first time in a written format the government has done that. After what it had said in the economic survey, it had given a growth projection of 6.5 to 7%. However, when they say around 6.5%, it could be also slightly higher than the 6.5% that we're talking about, but unlikely to touch 7%. At least for now, that indication is very clear. Also looking at the current numbers. So that's one that we need to keep in mind. The second also, they've gone into the reasons why the slowdown in H1 occurred. Of course, there had been a slump in government capex. Private capex was yet to pick up to that extent. So both of them had their own, kind of contributory factor. But it also notes that probably the monetary policy stance and the macroeconomic prudential measures taken by RBI could also have, kind of contributed to the slowdown in H1. Plus, it also talks about low corporate hiring and lower compensations, as the other factor for slowing urban consumption during H1. So I think all of these factors put together, we know why the Q2 number was a growth shocker. And consequently, though the numbers are going to look better in the coming quarter, but it will impact the overall outlook, the growth outlook estimate for the current financial year. That's one. Second, it also talks about, how to anticipate or what can be anticipated in FY26. So it says very clearly that, the economy prospects are bright if you look only at the domestic economy of India. But we need to be aware about the global challenges, and they're going to be few and far in between on that front. Very quickly, one thing I would like to mention is that it talks about the deviation, or rather the change in the path of interest rates that the US has adopted, how it has impacted currencies around the world, including the Indian currency, and also the fact that it creates an uncertainty for the monetary policy authorities here in India as to how they should look at the rate, the RBI rate structure down the line over the next couple of quarters. So that's going to be an overhang that needs to be watched out for.
Right. The Indian industry, of course, hoping for a rate cut in February, but the US Fed rate cycle will also be watched very closely, as Sapna is pointing out. Thanks, Sapna, for joining us with that very important update at this hour. Moving on, the government has appointed